Welcome to Ready Capital's fourth annual investor AGM and coupled with appreciation. We're happy to see you here today. My name is Ron Quadra. I am the Chief Operations Officer of Ready Capital and the trustee. We're here tonight not only to thank you, our valued investors, but also to celebrate another successful year that we had in 2022. 2022 was a year of turbulence in the housing market caused by multiple Bank of Canada rate hikes, increases in property value, and high inflation. Despite all this, Ready Capital pulled through with flying colors, as confirmed through our most recent financials, which is now available through our website. We enjoyed a growth of 47% year over year in assets under management, growing from 41.1 million to 61.3. Our number of investor accounts also saw a big growth, 29% year over year, with 125 new investor accounts for the year 2022. So, I'll say it again, thank you very much to our valued investors. We'd also like to thank our most trusted business partners who are here with us tonight. Partners, as I introduce you, please come up and have a seat, and we'll hear a few words from you. To start, I'd like to introduce Christine Zhu, our President and CEO.
Thank you, everybody. Welcome. So I'm going to have a speech later on, so I'm not going to say too much, but welcome. Thank you.
So first I'd like to call on Martin Reed. He's one of Ready Capital trustees. Next is Kevin Cohen. He's head of AUM and he's our securities lawyer and is also the founder of debt market dealer Belco Private Capital. And Shay Young, partner at Seagull GSC, our auditor. Before we begin, our partners want to say a few words. I just want to say thank you also to Robert Lindemann, who's our internal counsel. He's not able to join us tonight, along with Jonathan Bosray, who's the president of Belco Private Capital.
Hi, thank you very much, everyone, for coming out this evening. I just want to two things. One is to thank the team at Ready Capital. The last year has been very challenging with rising interest rates, rising inflation, etc., and they continue to deliver results regardless of the economic environment. And congratulate them for a year well done. Thank you.
Thank you.
Hi everyone, it's wonderful to be here and to see the growth that's happened year over year. Obviously this is a very professionally run event, just like Christine runs her business. It's been a real pleasure and we feel really fortunate, both Belco and AUM, that we were selected as service providers. Belco sponsors three very important people. Right now, currently 3 people that are employees of Money Broker, but are dealing representatives on Belco's platform, and Belco has non-employees of Money Broker that train them, that oversee them and help them perform their obligations. And we really appreciate the care and attention to detail. They take compliance very seriously, and we appreciate that you do also. On the AUM law side, we work very carefully to create the offering documents for those of you that choose to invest. They're important documents. They're largely for the benefit of you. So if you ever have any questions, don't hesitate to speak or ask any questions of your dealing representatives, because we're here to answer those questions and want to make sure of continued success of the fund. So congratulations to you, Christine, and the whole team. Thank you.
Hi, my name is Shay.
Seagull GCSE LLP is the independent auditor of the trust. We executed this year's audit smoothly with the full cooperation and help from management, and we believe the financial statements prepared by management presents fairly the financial position and financial performance of the trust for the year ended December 31st, 2022.
Thank you.
Okay, thank you, gentlemen. Next, I want to introduce the Ready Capital staff, just to come up on the stage here. We'll start with Mike Quadra, who's our VP of Underwriting. Next is Gigi Wang, Executive Market Dealer for Ready Capital. Oh, Vivian Rep, sorry. Vivian Liu, she's also an Executive Market Dealing Rep for Ready Capital. Teresa Tang, who is one of our underwriters. Yingqi Yang, one of our administrators. And Yanru Wang, one of our administrators. And Kat Lee, our newest addition to the team, is one of our administrators as well. I also want to acknowledge three of our staff members that weren't able to join us here today. Jasmine Fu, she's the Senior Administrator, and you've probably spoken to her in your dealings with Ready Capital. Patricia Lamb, who's our VP of Sales and Marketing, Sales and Underwriting, and Shirley Dow, who's an Executive Market Dealer at this.
Are you all excited to listen to my speech or waiting for the movie to start? So, today is the first time after COVID we're getting together in this room, and we are trying something new. We're trying the new technology. So we have, you see, when we speak in English, the screen will show some Chinese subtitles, but the technology is not perfect. Actually, probably only 80%. Lots of times, it doesn't really translate well. For instance, like our company's name, for instance, Ready Capital. What it says, oh, perfect, it says Ready Capital, but lots of times it doesn't translate correctly, so just bear with us. If there's any questions, feel free to ask me. So I'm going to speak a little bit in Chinese right now. Maybe you can turn off the translator. 我先讲一下中文哈，如果讲中文的话呢，它就没有翻译；要是有翻译的话呢，就非常很奇怪了。所以我们今天试一下这个，为了缩短时间，因为想8点钟给大家准时的看电影，所以呢，我今天只用英文来讲。这样子可以节省一点时间，所以但是有时候那个 translation 啊，有时候翻译也翻得不准，而且翻得很奇怪。如果没有看懂的话呢，要么是我发音不准，要么这个机器不够聪明啊，所以大家今天也稍微有一点耐心，我们也是尝试这个新的方法。如果不行的话，以后所有的东西还是中文，但是今天呢，我们就先尝试一下，所有都有英文的。那么大家就比较辛苦看的这个 screen， 如果有不明白的地方，它要么是机器比较不聪明，或者我讲的这个声音不太准啊。So let's start. So today is actually a celebration. It's a celebration of our 4 years journey. We are 4 years already, like seems to be yesterday. In February 2019, we started Ready Capital, and lots of you actually are our initial investors. At the time when we started, and it's 4 years, I'm going to just review what happened in the past 4 years. First of all our partners. So the partners who are here, everybody we start 4 years ago, all partners are still staying with us. Our trustees, so 3 trustees there, and our EMD, Belco, Kevin was representing a Belco, and we actually have a new additional EMD from Vancouver, Genesis. Our goal is to have more EMDs, more partners joining us. And our administrators still the same. Falcon Ridge, auditor, Siegel, still the same, very happy, and auditor still with us for 4 years, and we have 3 representatives today on the company. And our internal lawyer, Robert Kligerman, who unfortunately couldn't come today, and our funds counsel, our corporate lawyer, AUN, Kevin, is here today, and our underwriting team is ever strong. So really, really happy and really appreciate our amazing team, incredible partnership with our partners. That's proof to showing our stability of the fund. All partners here and showing our professionalism and the expertise we enjoy working with these partners. Really, thank you, appreciate it. Oops. And look at our performance. So that's our past 4 years performance. Our fund starts from 0. Right now is over 62 million now. And many of you here with us are our investors. Thank you very much for your support. And our investors from 0 4 years ago, right now we have 516 accounts, that including cash accounts, RSP, and tax-free saving accounts. So 516 of you, thank you. And our performance, that's what we do for return for our investors. And our performance is incredible. We told you we can give you can expect over 8% returns. And every year we surpass our promise. So we're doing better than 8% every year. The first year, only 11 months, the return is 8.11. And the second year, 8.49. Third year, 8.37. And this past year, 8.23. So that's the return on investment. If you start as our initial investor in the first month, February 2019, if you invest 100,000 with us, without taking out interest, we do automatic compound investment for you. This money, by the end of last quarter, is already 140 something thousand. So it's over 40% return on investment. So that's our excellent report to all our investors. And our portfolio summary, so we have 62 million, but we actually lend out during the 4 years, double our portfolios, so 136 million. And we pay out our investors over $8 million for the interest to investors. I think we're doing great, something to be proud of. So, how we did it? Like, why our fund doing so great? Like, what's the secret? So the secret is very simple. This fund is built for investors. Before we started this fund, we asked all our investors, potential investors, what's the most important thing for you if you invest in our company? If you put money into our funds, what's the most important thing for you? What are you looking for? So many of you are here, probably you already answered the same question. And actually, before I go on the second page, maybe you can yell out to me, what is most important things for you for your investment at this stage? I heard something making money, and I heard somebody say, risk safety. Yes. So everybody told us, so for all the survey before we even started the fund, I think the most important thing the investor told me that when they invest money with us, they want safety, they want to preserve their investment principle. And secondarily is return. Because there's a different type of investors, and also there's a different stage in life. I think most of the investors are really, here, the audience, that's a very good representation of the typical investors. You are investors, you're typical investors. In this stage of life, you don't want to risk all your money. You want to preserve your hard-earned money. You preserve your principal. So you want somewhere to put your money safely, but you also want to see some growth. So very importantly, the fund is decided to have safety, to capital preservation in mind. This is so important. So we build on everything depends, in response to all you want. The fund is built for investors. So what we do is, first of all, talking about the safety, we want to choose an investment which is have lower risk. There's nothing in life called no risk, right? But we can only do lower risk. So when you invest money, what is the lower risk? When you invest in stocks, or you invest buying a Bitcoin or something, maybe have a higher return, but have higher risk. So people are thinking the lowest risk investment may be something related to real estate. So, but we're going to show many of you, you are already our investor, you probably know, but your friends probably do not know. We're going to spend a little bit more time about talking about the real estate investment and risk. So we choose, this fund is called Ready Capital Mortgage Investment Trust. So by the name you know, that's all we do is mortgage. So many investors, probably 90%, 95% of investors, they all ask me the same question. Where do you put your money? And I've been telling you every time, every seminar, every time, all we do, 100% all we do is just mortgages. Because our fund is a mortgage investment trust. That's all we do. It's mortgages. Don't ask me, like, majority, what do you invest? Like, mostly what do you invest? All our investment, 100% of our investment are secured debts, are mortgages. So that's one thing to control the risk. We'll try to lower the risk. So I just want to repeat again, because every seminars people ask the same question. All the investors thinking about a fund, a real estate related fund, they ask me the same question. So I'm just going to spend a couple more minutes today. That's the only thing today I'm going to spend a little bit of time on. So when you're talking about invest in real estate or real estate related fund, there's two categories. Very important. Everything is two categories. Either you invest in equity or you invest in debts. Only two. So when you see investment, something like a real estate fund or whatever fund, ask yourself, where is the money invested? Is it equity or debts? So what's the difference? So equity are those you hold direct ownership into the real estate property. So for instance, you're buying a home, you own a home, that's equity. Or few of you own a home together, own a property together, that's equity. Or developers, they buy a land, they invite people to invest together with them, that's equity. So when you own directly the real estate, it's equity. What is debt? So debts, you don't have ownership on the real estate, but you are the lender. You lend money to the landowner, the real estate owner. So for instance, somebody buying a home for $1 million, they cannot get a mortgage. You lend the money to them. So the person, that's your friend, or the person you know, that's the owning the equity. You give me the money, you don't own the property, you're owning the debt. So what's the difference? The difference is the equity in real estate is not that liquid, has a higher risk. The reason why higher risk, even you buy your home, have a higher risk, then fine. Why? Because if you buy a home for $1 million and suddenly you need the money, you may not be able to sell it right away. But if you want to sell it right away, you probably have to discount it. So $1 million home, if you want to sell it right away, you probably have to discount, say, $900,000 or $700,000 or something like that crazy because you need the money right away. So it's higher risk to lose money. So that's the equity. Instead of a debt owner, so the person who bought $1 million home, they borrow $650 from us. If they need to sell the home or they cannot afford the home, we still owning the debt. They still pay us. They still have to pay us. So even the property decreasing value before is $1 million, and now because the situation changed, the market situation changed, the property value decreased. But if you own the debt, own the mortgage, you still need to pay. So the debt is more secure. So that's the differences between equity and debt. So there's a different structures because for the equity funds and debt funds. So for the equity funds, there's so many different type of mutual funds you can buy from the bank. They're owning different type of real estate. In Canada, in US, international equity fund. So the usually name is some international real estate fund. So that's equity fund. And the second type of the equity fund is, pointer doesn't work. Okay, it's REITs. So lots of people heard about REITs because it is still very popular even in China. So lots of people know REITs. So what is a REITs? REITs is real estate investment trust, right? So you own the equity, but it's a direct ownership, but you put it into a trust format. So because that's owning directly, they have a direct ownership in the real estate. So when we're talking about risk, the risk is still a little higher. So there's so many risk funds out there. That's most people when they invest in real estate funds, that's risk fund. And also there's so many private funds. So when you heard people losing money and losing 100% of money, lots of times is the real estate private fund. So what is a real estate private fund? Typically, a developer, for instance, they bought a piece of land. This piece of land they think is going to be developed into a condo project or a subdivision or something like that. So they don't have enough money, but they want to raise money. So the developer say, this piece of land right now is $5 million, land only. However, after 5 years, when I develop, say 200 units condo become 50 million or something like that, crazy. Which is true. Lots of times developers make so much money in Canada, in China, the same thing. But when they raise the money for the project, because there's so much cost. First of all, you buy the land, and then there's so many permits to apply for, and this soft cost, it can take years, 5 years, most on average 5 years, sometimes even longer, sometimes never, right? So they raise money to do the project, and they promise investor, I'll give you 20% return a year. However, this is minimum 5 years, you cannot move your money because there's no cash flow, right? So when 5 years later, when I sell, it can give you 20% return. Some do, actually there's so many successful projects, people making 20%, 30%, even higher. But lots of times when we see people losing every penny, 100% of their money, is because the developer actually went under, they went bankrupt. Even though you have the equity in the fund, but the equity is not the exact amount. So they raise, instead of $5 million, they raise say the project is 50 million, they're using the percentage of that. You are LP owner, you're limited partnership, but when the project goes down, of course, everybody losing money, even though you don't have limited partnership, you were told you have no liability, but you could lose everything if the project didn't go. So most people losing money is on those equity funds, especially private equity funds. Risks, of course, it can go up and down. It's sometimes a lot of commercial risk or office risk. I think it's going to be a big problem, but that's the equity side. Okay, and then when we see talking about the debt side, so debt side is also there's a 3 different categories. There's a mutual fund, so lots of banks they have something mortgage fund. It's not that exciting because the return in the past few years when interest rate low, it's really nothing. So no financial advisor, nobody even buying it because the larger mortgage fund are from the Schedule A lenders when the interest is so low. Really, it's not exciting. It's like 0.5% or 0.75% is already a very good return. So that's a larger mutual fund. And secondly is the mortgage investment trust, which that's our Ready Capital's mortgage investment trust. Relatively not that usual because the cost is higher to register a mortgage investment trust, for the legal costs, for the accounting costs, the ongoing costs. So lots of times when people raise money to do mortgages, they don't go through the trust route. They usually do a private fund, like a mix or the private fund. But the reason we do a mutual fund trust, it's just like say the REITs, the real estate trust, it's just because we want to be more transparent. And the more transparent, the more the investors see, and the more regulated, I think the safer is our fund, the safer is our investment. So we choose the mortgage investment trust route. And for the private side, there's a private side we call the mix, and then also private fund. Mix right now actually is pretty regulated as well, and getting more and more regulated because it just like this. The industry try to protect the government, the regulatory try to protect investors. So this is getting more regulated. And the private fund, so lots of private lenders, a few of them putting money together to lend money, and then they say they are regulated. But I think it's very easy if you know the differences between a regulated fund or non-regulated fund or private fund. Just ask them to show you offering memorandum, prospectus, or all their financial statement. If they don't have it, and I think you shouldn't invest with them because you can see nothing. You can tell you anything, but you can see nothing. It doesn't mean anything. So when people want to invest, I hope you can find a very credible fund with all the financial statement, with complying with the offering memorandum and with the prospectus, things like that. So that's it. So that's the main differences for us. Try to safeguard your money, our investors' money. We choose to invest 100% into mortgages and into a very regulated vehicle as mutual fund trust. Okay, secondly, so all the mortgages right now, all investments are in Ontario. The reason all in Ontario, because we know Ontario very well, even though in BC, in Alberta, there's probably lots of good opportunities, but we don't know the area as well as in Ontario. So 100% of money right now is in Ontario. So the second most important thing for the safety of your money is flexibility. Just like previously when I gave you an example, when somebody promised you 20%, 30% a year, like lots of developers raise money, but because we don't have cash flow, they say your money has to be locked in for 5 years, for instance. Even though you can get 20%, but your money has to be locked in 5 years. That's no good. That's a very high risk because you don't know what's happening 3 to 5 years. they can go bankrupt. That means you have nothing. So for us, the flexibility we give you is there's no locking period. Anytime, because we only invest in mortgages, and we get monthly income, and people can pay off anytime. Our borrower likes us too because we don't have locking period for them either. They can pay off their mortgage anytime. So for us, for all investors, there's no locking period. If you need your money back, give us 2 months notice. You can withdraw your money. And many of you probably already withdraw money in one point or the other. Give us 2 months notice. However, because the administration costs and everything, we don't want people to put in money and taking money all the time like a saving account. So we say in the first 12 months, if you take off money, we charge you 3% service charge. So after that, after the first 12 months, there's no cost. Just give us 2 months notice. So that's flexibility. It's very important to safeguard your money. And third is transparency. You know where you invest, and you know the money when you give the money, you know where it goes. That's very transparent. If you give the money to a private company, to your friend, you may not see the financial statement all the time. They may not show you the books. If their books is not going to be audited. But our transparency, I think that's very important to safeguard your money. So talking about the transparency, first of all, I'm going to read this. I think it's very important. Ready Capital is a mutual fund trust registered in Ontario. So we are regulated as a mutual fund trust registered in Ontario. Fund terms governed by offering memorandum. So we have an offering memorandum, and very important. Each year, when we have a new financial statement, we have to update our offering memorandum. Do you know where to get offering memorandum? Go on our website. So our financial statement is on our website, the most updated financial statement, and our offering memorandum is on our website. If you just email it, so that you need an offering memorandum, right away and send it to you. So every year, minimum, we have to update our offering memorandum, and it's just done. So it's filed, it's all there. And the money is distributed by our EMD lab from Belco, and then the new EMD we just acquired, we just partnership with Genesis in Vancouver too. So all the funds are sold by EMD representatives. So the transaction filed by security regulator every month. So every month, if it's Ontario investors, we file in Ontario. If it's BC investor, we file in BC. So every provinces, they have their own regulatory security commission. So every month, we file reports with the security commission in the province. And the mortgage administered by Falcon Ridge Management, and unfortunately, our partner today from Falcon Ridge is not here today. We are audited by Siegel. We are RSP and tax-free saving account and cash account, of course, eligible. So the trust account, the registered account administered by Olympia Trust, which is the largest administrator in Canada. We have monthly reports. So every of you receive monthly email report every month. Sometimes I got people calling me, we didn't receive a report. So I said, just check your junk email box. And if you don't see a report, you miss 1 month's report. So check your junk email box first, and otherwise just call us. We'll manually send you a report. So every month, the investor will get a report, and also by the year end, of course, we have an audited financial report, and the T3. T3 is distributed every time at the end of March. So March 31st. I believe everybody already received your T3s. If you didn't receive a T3, Runway Canada already have a copy. You can go online. It's there and check your RSP, your tax-free saving account, your cash account. I'm very grateful. Most of our investors are our past clients. People borrow mortgage through us, and they know how professional we do our work, and they trust us with our investment. And even though you still have mortgages, but you have RSP, you have tax-free saving account, and then you have money saved for your future. So that's a good place to put your money in our fund. And we are socially responsible. We try to contribute to the society and give to those who need it. So last year, our first annual golf tournament, we only have, because of the first year, and we didn't really advertise, doing too much advertisement, the tickets sold out. Most of our investors are our past clients. People borrow mortgage through us, and they know how professional we do our work, and they trust us with our investment. And even though you still have mortgages, but you have RSP, you have tax-free saving account, and then you have money saved for your future. So that's a good place to put your money in our fund. And we are socially responsible. We try to contribute to the society and give to those who need it. So last year, our first annual golf tournament, we only have, because of the first year, and we didn't really advertise, doing too much advertisement, the tickets sold out almost instantly. We raised $15,000 for Alzheimer's Society of Canada. And this year we're going to do it again. So the date is already firm. It's July 18th. It's a Tuesday. So any of you who's interested, try to register as soon as possible because the ticket will be sold out. And this year we will our target is minimum double of last year. And okay, well, that's our main presentation. Thank you very much. And I know our movie is starting in 5 minutes. Unfortunately, we probably do not have much time for the questions. So our movie will start at 8 o'clock because it's a long movie. If you have questions, I think just reach out to us. There's all the contact information, my cell phone, my email and WeChat, and feel free to reach out to us. We have 5 minutes right now. Oops. And we're going to start the movie at 8. And if you have questions, you can ask now. Otherwise, if anybody would want to take a break, we want to get a drink or something, 5 minutes. If anyone has questions,